And we'll start with the latest on fuel prices. Some oil marketing companies have taken the lead to drop fuel prices. This, we understand, is because of the recent stability witnessed with the cedi, as well as a fall in the price of the commodity on the world market. And so latest information we have, based on the adjustments, diesel has fallen by 2.29% per litre, whilst petrol has gone down by about 6.56%. And so if you check the prices, petrol ranging between 12 cedis 90 pesos, 12 cedis 95 pesos, and diesel having around 13 cedis. Government is attributing this to the gold for oil policy, but is that really the case? We will be discussing that in a bit. Joining us on Zoom, Dr. Yusuf Suleimana, who is an energy strategist. So thanks for your time, Dr. Suleimana. We've seen government tout the gold for oil policy as reason for which we are witnessing a drop today. But we also know that the cedi has been stable, relatively stable over the past few weeks, and crude oil prices are dropping on the international market. Your thoughts?
Yeah, thank you very much, Daryl. Good afternoon to you and your charity viewers. Yeah, indeed, you are right, Daryl. These two factors are key to what the consumer pays at the pump, including the exchange rates dynamics, the prevailing prices in the global front, and then the taxes and levies that we have. It's also true that the drop that we are experiencing now, or this particular period in time, is just the commodity price within the international space that is dropping, that has cascaded to the pump, and also the cedi is stabilizing, and that is the dicey area. Why is the cedi stabilizing? Is it that the gold to oil deal is having impact? Because that's actually the main purpose of the program. The main purpose of the program, as we're told, is to arrest the fast depreciation of the cedi. But as to whether that is having that much impact, I have my doubt. It's early days yet, because if you look at the quantity that has come into the market, I feel that we need to be able to ramp up the amount that is coming to the market to be able to have any significant impact, at the pumps. Yes, even crude oil prices are still taking downward trends in record high. It's plunged from yesterday, and though it is still it's starting to gain momentum. So yes, it's difficult to tell solely whether the gold to oil is what is accountable for this. But if we are confident that the cedi is stable, and then we can trace it to the fact that there's so much pressure that's relieved on the dollar or on the exchange rate, then we can say that sure, the gold for oil is having a bit of impact. But for me, with the quantity that has arrived, we were told that we're going to have about 50% of the market being supplied, by this kind of program. And so if we do have the 50% being supplied, it will then mean that appreciably we will have a relief of about 50% in terms of whatever hard currency that we need to import this finished product. And so if that happens, it could have much stability on the cedi. Yeah. So yes,
okay.
It's multiplicity of factors here, Darren. Both factors could be accountable. Yeah.
But what's significant, though, is that the price of crude oil on the international market has dropped from around $80 we've seen in the last 6 months to below $80, and that's something I wanted to talk about. What's the trigger?
Yeah, so that's a fact, and then consumers will really hope that this probably will hold up. But it is actually hanging on weak grounds, and I'll explain further. What is happening now, Daryl, is not one of the major fundamentals that could shift supply-demand of a sort. It is just this plunge is just financial system weaknesses induced plunge. Let me put it that way. It is just weaknesses in the financial system that has instantaneously cascaded to the drop. And what really happened, if you notice, over a few days ago, Silicon Valley Bank collapsed phenomenally, and instantaneously, and followed by another bank. So if banks are collapsing like this, Darren, it will lose confidence within the banking system with drastically dwindle. And that's actually what happened within the international space. We do have confidence waning seriously, and this has cascaded onto all commodities, and crude oil, of course, a major commodity is impacted. So yes, If you look at the fundamentals on the ground, what could let the crude oil prices drop, none of it is coming to play at this moment in time. There hasn't been any fiscal drop in consumption. In fact, on the contrary, China consumption is slated to go up because they are not going back from their zero COVID policy, and that they are the key drivers of this, of the consumption aspect or the demand aspect of the price buildup. Supply side, of course, still supply side. We are not expecting any drop or any change in supply. So yes, this is actually just due to the financial system collapse that happened from Silicon Valley Bank, and there's a tendency that it will cascade to other banks. So consumers or traders or investors are exercising what they call abundance of caution. And if that happens, remember, these commodities, this financial system provides a framework for these commodities to be traded. So once confidence in the financial system is winning, definitely it will have impact on the commodities demand. And that's actually what is happening, what is causing the plunge.
Well, we like it when the prices decline on the international market, at least from the consumer perspective. Question, how long can this be sustained, and what does it mean for the consumer?
Yeah, so how long it will sustain? It could sustain is a very good question. Like I just mentioned, this one is not one of the fundamental. If it's a major fundamental, let's say drop in demand from China, then we can say that it could sustain. This is just market confidence waning off. So the sustenance or the sustainability level will depend on how fast the confidence will return to the market. If you just remember, just a few days ago, or today or yesterday, Swiss Bank, Credit Suisse is getting about 54 billion being dropped into the stream. In fact, that's actually what is happening. That is causing the oil price to recap again. If you remember, this oil price are coming back even from 72. Now we have it at 73, 74 thereabouts. So yes, if the confidence comes back as quickly as possible, or if the market is able to absorb this shock, we will come back to the 80s in no time. What will mean to the consumer? Of course, if it stays around the 70s, I think it's very good for the consumer. Consumer will likely pay less, and then if it stays low around the 70s, coupled with very stable currency, I believe we will gravitate to a single digit.
Dr. Yusuf Suleiman, I appreciate your time with us this afternoon. Energy strategist there, Dr. Yusuf Suleiman. You're watching.